Godrej Properties is in focus as they've emerged as the highest bidder and secured the letter of intent to develop 2 group housing plots, and this is through the e-auction that was conducted in Haryana Shahri Vikas Pradhikaran. The company has said this in an exchange filing. They said the 2 land parcels are located in the Gold Coast Road in a micro market, and the 2 prime projects are spread over 2.76 acres as well as around 5 acres as the second property respectively. So that shall have a combined estimate revenue potential of almost 3,100 crores. So big and revenue potential coming in for the company over there, and that is why we're seeing that the stock is buzzing in trading with gains of 1% trade as now, Cheryl.
Right, that is Godrej Properties for you. But let's talk about HCL Tech, and yes, that's one particular counter that is in focus in today's trading session. No doubt, a lot of analysts actually expected the stock to actually see a downtick, and that's indeed how it transpired, Vinny. The stock did open with an initial downtick, but you know, one of the most interesting thing is the way how HCL Tech recovered in trade. And one of the highlights that I want to tell you about, or rather one of the brokerage note that I want to highlight about is ICICI Securities. They've come out with a note on HCL Tech, and they've actually gone ahead and upgraded the stock from an add rating to a buy rating, and you can see that reflect on the stock price as well. And they've also given a target of 1,275 rupees per share, which actually implies a 14% increase in the stock price from yesterday's closing price. So that's HCL Tech for you. In a slew of downgrades, in a slew of cut in their target, you have ICICI Securities, which has gone ahead and in fact gone ahead and raised their target, raised the recommendation to a buy from an add rating.
Okay, surely keeping an eye out on that one. That is what, you know, we saw that recovery, which like you were mentioning, that is interesting to see as well for HCL Tech. But we also managed to speak to the management of HCL Tech on their numbers. We spoke to C. Vijaya Kumar, the CEO at MD at HCL Tech. Listen in to what he had to say about the growth story.
No, this does not factor in this. This will be in addition to the revenue guidance that we've given. Normally, our revenue guidance is organic guidance. And this is a very good acquisition for us because automotive software and automotive engineering is one of the biggest spend areas in the engineering and R&D services. And we were a little under-indexed in this space, and we've been looking for the acquired assets to enhance our capabilities. And with our global capabilities and the strong capabilities in automotive of ASAP, we believe it's a great combination, and it will help us to get some good traction in this segment.
All right, moving on then, Ashesha, let's talk about BASF, and this particular counter, as I believe, is not reacting to a news piece back home, but what the parent had to say, isn't it?
The parent BASF Global actually has gone ahead and cut its guidance for calendar year 2023. As far as revenue guidance is concerned, it has been cut to 73 to 76 billion US dollars from their earlier guidance of 84 to 87 billion dollars. As far as margins are concerned, EBIT guidance meanwhile has also been cut to 4 to 4.5 billion from their earlier target of 4.8 to 5.4 billion dollars. So significant guidance cut is what we have seen, and that is the kind of impact that we have seen on the global company. As far as second quarter results were concerned, second quarter of calendar year 2023 for the parent company, revenue declined by about 25%, mainly driven by lower prices and volumes that the company experienced in the quarter gone by. Growth in global industrial production continued to be slow, and looks like it is expected to remain slow for a couple of more quarters. On account of this guidance cut that came in from the parent company, the stock was in fact here today, but now has recovered, and as we speak, it is trading with gains of marginal 0.3%.
Okay, let's move on and talk about an IT company again, and Wipro, Lisa, that's expected to report its numbers today. So what are the expectations? What are the ET Noah polls actually suggesting today? As of now, the stock is surely buzzing in trade with 1% gains.
Well, yes, Wipro report muted earnings, and that is on the back of they have more exposure in BFSI as well as retail. So the slight demand pick up in that verticals, that is expected to lead to sequential decline both in the revenue as well as the PAT numbers. The revenue is expected to be down 1.5% at 22,870 crore. The IT services revenue growth is expected to be down 1.6% at $2,777 million. The EBIT margin is also expected a contraction. It's expected to be at 15.9% versus 16.2% last quarter. PAT is expected to be down 1.5% at 3,040 crore. The margin is expected to be in the pressure. And talking about the order intake, they didn't see any major deals this quarter. So the order intake is likely to be less than what they saw last 2 quarters, and it's expected to be below 4 billion run rate that they have been seeing. So even ICICI Securities say that they expect muted 0 to 2% growth for Wipro. And let's see after TCS and HCL how this IT biggie scores in its numbers today.
All right, so yes, let's see how this one scores in today's trading session. But Emphasis, Ashish, how you think this one will score on the charts? Where do you see Emphasis headed from here on?
See, Emphasis has yet to outperform, and we can see that it has formed an inverted head and shoulder pattern, which is a bullish pattern, and is giving a breakout in today's session. So looking at the overall structure, and the volumes are picking up along with the breakout that we are seeing above the neckline, which is at 1920. So the overall trend for Emphasis is bullish. The pattern target on upside comes to around 2050, and on the downside, the shoulder can be as a stop loss, which is around 1850. So use any dips as a buying opportunity, and we can expect it to reach towards the level of 2050 or possibly higher.
So okay. That is Emphasis for you all. Keep an eye on those levels over there. But let's move on and talk about Samvardhana and Motherson. This one is in focus, or SAMIL as we know it as. It's in focus because Jefferies has come out with a note where they've raised the target to a buy. They've raised the rating to a buy, and they believe that the improving earnings trajectory is keeping them positive on the stock. They're further highlighting that, 4 tough years have actually come in for Samvardhana and Motherson in terms of the operating performance, and that has now started seeing an improvement coming in FY23, and they see that the EBITDA will be doubling, EPS is trebling over FY23 and FY26, led by a supportive operating environment is what they're looking at, as well as the profit improvement as well, and profit accretion from the acquisitions that they made as well. So that is why they've upgraded the FY24, FY25 EPS by 18 and to 42% and are at 10 to 17% respectively above the streets. So yes, keeping an eye on that one. The stock has also been a bit of an underperformer compared to the Nifty 50 by around 40% in the last 2 years. So surely underperformer, and that is making it attractive for Jefferies. That's why they've upgraded their rating to a buy from a previous hold and a target price of 150.
Let's talk about the next stock that is in focus, and that indeed is SpiceJet. And what a run-up this particular counter is seeing in today's trading session, and biggest move that is coming in for this one since March. I will request my producer show the stock that's listed on the BSE for SpiceJet, and it has climbed the highest level since March, like I mentioned, and this after the company said that their main shareholder, that is Ajay Singh, and his companies will go ahead and subscribe to shares worth about 500 crore rupees. This in order to strengthen the financial position of SpiceJet. We know that this one is actually facing very tough times also. The shares at one point in time was trading higher by about 7.5%. Right now, as you can see, it's given up all of those gains. It is all of those gains coming in. Like I said, it is a little tough patch coming in for SpiceJet. And also you had HSBC also today who upgraded the stock with a hold rating with a target of around 31.6 rupees per share. But yes, the stock has erased all of those early morning gains, or approximately 7%, now trading lower by about 0.3%.
Absolutely, that is SpiceJet for you all. But let's move on and talk about IndusInd Bank. And Lisa, what is the news flow here today? Why is this one in focus?
It's in focus on the back of a brokerage note by Morgan Stanley. They have released a note. They have maintained overweight on the stock at a target price of 1,725 per share. They say that the company, that the share price in the next 30 days is going to rise relative to the industry, and that is because on the back of strong Q1 earnings that the company is expected to report. This strong earnings will be on the back of credit cost moderation and also healthy top line growth, and they also expect outperformance on the margin with the rate peaking out. The Morgan Stanley also added that the valuation looks attractive for the company. Well, we can see that the stock is in focus on the back of this brokerage note.
All right, so that's interesting bang for you. But Mahindra Holidays, what's at play in this particular counter? Because we've seen all of these so-called reopened trades. Now we've reopened, and how everyone's actually traveling all the time. In the last 6 months, 20% uptick coming in for Mahindra Holidays. Where do you see this one headed from here on?
Yes, absolutely. I mean, people are traveling all over the place, and we can really see, and that is reflecting in the stock prices. And Mahindra Holidays has shown a very strong breakout on the upside from that level of 311 and is continuing to inch higher. So the overall tone is positive. It has given a good breakout after forming a double bottom around 285. I think the stock can be headed towards 340 over the short term, and on the downside, 314 is a very important support.
Okay, keeping an eye out on Mahindra Holidays. But let's move on and talk about 5paisa Digital. Ashish, I believe this one is an earnings candidate as well.
This is an earnings candidate, strong set of results on a year-on-year basis. It is off from the highest point of the day, but despite that, holding on to gains of a solid 1.5 to 2% as we speak. On a sequential basis, numbers are muted, but on a year-on-year basis, we have seen a solid jump on the bottom line. In fact, profit after tax has seen a jump of nearly 97% on a year-on-year basis. Management commentary, meanwhile, has been quite positive. They've reported highest ever profit and highest ever margins of 17% in the first quarter. They say they intend to scale up build a robust technology platform and acquisition substreams while continuing to build efficiency by strengthening their digital tools and processes. So strong set of numbers on a year-on-year basis, supported by strong management commentary and highest ever profit figure that we have seen in the first quarter, is why the stock is trading in the green today. As I mentioned, it is off the highest point of the day, but despite that, trading with solid gains.
That's 5paisa for you, but let's take a note of the markets and sharp decline coming in the benchmark indices as well as the broader markets, which is taking a sharper knock as we speak. Take a look at what small cap index is doing, is 1.5% off the day's highest point. Ditto coming in for mid cap index, which is down a % from the day's highest point. Sharp fall coming in for the broader markets in today's trading session. Look at Nifty Bank as well. That one is off about 320 points from the day's highest point. 0.7% downtick coming in from the day's highest point for Nifty Sensex as well as Nifty from the day's highest point. They're holding Sensex as well as Nifty from the day's highest point. They're holding on to the positive territory, but you cannot take your eyes off the broader markets because it is a very sharp cut coming in for both mid-cap as well as the small-cap index.
Just in the last few minutes, I guess.
Exactly. Right after we started, when we started the show, we were still near the day's highest point. Day's low for the for the broader markets, 1.5% for mid-cap from the day's highest point, 1.5% for small-cap from the day's highest point.
Okay, surely keep an eye out on those markets and where they are headed in the next 1.5 hours as well is what we have to keep an eye out on. But let's move on and talk about two stocks that are the rice stocks, that is KRBL as well as LT Foods. Now both these are in focus. Why? Because India is going to be considering banning the rice stocks, rice exports as local prices are surging in India. Now obviously India is one of the world's biggest shippers in terms of exporters in terms of rice, and considering a ban for most rice varieties, a move that may actually send a lofty global price of the food staples higher. And also let's not forget the El Nino weather conditions, that's a factor that comes into play as well. So as of now, the government is just discussing and planning on discussing over this ban on exports of non-basmati rice. Let's not forget, sentimentally we did see a fall coming in, but for KRBL as well as LT Foods, their main business is basmati rice exports. So it's non-basmati rice is a very, very minuscule amount, so not much of an impact that comes in. But sentimentally, we saw that stock price for both the companies fall, but as of now, we've seen a bit of a recovery coming in on both of them.
Right, so that is LT Foods, KRBL as well as Kohinoor Foods that you can watch out for, because business into the basmati territory, but what sources have told agencies is the government may consider banning exports of non-basmati rice. So that's why these are in focus. But let's shift focus. Let's talk about KIOCL, and this particular counter is trading at a 3-month high in today's trading session. And why is that uptick coming in on KIOCL? Because at one point in time the stock was trading in excess of about 7% or so. They've said that the operations of their pellet plant unit at Mangalore have restarted. On back of that, the stock is gaining for a second consecutive session. Right now, the stock is trading higher by about 3.7% as we speak, Vinny.
Okay, absolutely. Keeping an eye on that one. But let's move on and to stock number 27. Ashish, you picked up Macro. Why is this one in your list? What is it that is making it attractive for you? Because 40% return is already what you have seen in the last 6 months.
Yes, that is correct. If you look at the entire real estate space, that has been buzzing, and that specific index has not stopped. And if you look at Macrotech, or we also call it as Lodha, we can clearly see a very sharp move on the upside after it touched the 20 days average, which was around 660 levels. So the overall tone for Lodha is positive, and we can expect the stock to reach the levels of around 760. And on the downside, 660 to 680 is a very important support zone. So any dips that you can get, use that as a buying opportunity for the targets of 760 on the upside. And I think if you look at the ratio chart also, this stock has been outperforming the overall broader market. So continue to ride the momentum over here.
Moving on, let's talk about Delta Corp, and this particular counter, we remember it got knocked out of shape in yesterday's 20% in yesterday's trade. But let's take a look at what the stock is doing right now, because as far as, yes, there you go, it's extended the fall, and this because after market hours you got the data where you got to know that Equirus Wealth has sold some shares of Delta Corp in yesterday's trading session. Also about 25 lakh shares in a bulk deal is what Equirus Wealth actually sold its shares. Also, not just that, you also had Kalpraj also, Dharmashi, that also sold about 19 lakh shares of Delta Corp in yesterday's trading session. So post that particular share details about the bulk deal that came out, you saw stock fall at least 5% today. Second day of decline coming in for Delta Corp as we speak.
Absolutely. Second day of decline coming in for Delta Corp. But let's move on and talk about the next one, and that is Angel One, Ashish. Angel One on the charts, what is it indicating? What are the target price that one should actually keep?
See, Angel One has continued to show a steady rise since it formed a low in last week of May around 1200, and we have seen a very exorbitant rise on the upside. The stock is not stopping anywhere. There is no divergence yet. The momentum is intact on the as far as we can see. And the next target for the stock is around 1870 levels on the upside, and the support is at 1750. So as long as 1750 is intact, we can expect it to move towards 1870 levels.
Okay, 1870 levels is what we could expect it to move to as well. That is Angel One and the take coming in from Ashish. But let's move on, and Lisa, Inox Wind is the stock in focus as well today. What is the news flow for Inox Wind? And as of now, it's trading almost at the day's lowest point.
Inox Wind, as per our sources, they are expected to get a major global certification, and this is for the high megawatt turbine, and the certification is expected by next week. Now, how it benefits Inox Wind is that very few globally have that certificate. So with Inox Wind getting the certificate, it means that the orders can pick up big time for the company. And even the next orders in sight, the channels checks are suggesting that strong bidding is in process, and even the Gujarat government, they have issued tenders for 1000 megawatt wind project. If I look at the stock tracker from February lows, the stock is up around 112%. The order book, it has a good revenue visibility for the next 18 to 24 months, and even the profitability, the outlook looks strong because the profitability that is expected to triple in FY25 over FY24. So that's on Inox Wind, and that's why it's in focus today.
All right, that's Inox Wind that is in focus in today's trading session. But let's talk about all the stocks that will be in focus post no HDFC on the bourses. So, Ashesha, which are the stocks that are in focus?
Well, yes, HDFC has now stopped trading, on account of which we have some rejigs that has happened across indices. LTI Mindtree has replaced HGFC in the Nifty 50 index, while JSW Steel has replaced HGFC in the Sensex index. On account of this rejig that has happened, all of these three counters are in focus today. HDFC Bank, as we can see, holding on with gains of nearly 1%, while LTI Mindtree is also trading with gains of nearly 1.5%.
Okay, surely keeping an eye out on those names there. But GE Shipping is the stock that Ashish is going to be talking to us on the charts. And Ashish, what is the target that you're keeping for GE Shipping? Should we expect a good upside?
Yes, the target for GE Shipping can be around 810 levels on the upside, and the stock has steadily rise. If you look at the 20 days average, it has been, every time it has touched that 20 days average, it has continued to move on the upside, protecting the trend line and the average. As long as the support at 740 is intact, I think the stock is headed towards 810 levels.
All right, so that is GE Shipping for you. But you know, Vinny, amongst the bulk deal data that came yesterday post-market, as no doubt Delta Corp was standing out, but also Star Health did.
Absolutely, and we had spoken about it yesterday in terms of just the bulk deal that we're seeing. Now we have a name that has come in over here as well. What we saw coming in is that Apis Growth has actually sold around 52 lakh shares in Star Health at a price of around 612 rupees per share. So it has been a bit of a subdued trade coming in for Star Health as of now. The buyer names have still not come out, so maybe the percent of stake that they bought is less than 1%, so those names have still not come out over there. But yes, that is the main reason that we're keeping an eye out on Star Health today.
All right, talk about Zensar Tech then. Ashish, how is this one looking on the charts to you? Do you think that this one will be able to replicate a good performance going ahead?
Zensar Tech, we saw some kind of profit booking from the higher levels from around 420, 425. It went towards that level. We saw some profit booking, but overall the stock has given stellar returns. If you look at the movement of past few months, the stock has done exceptionally well. And I think it is an opportunity to buy again at the current levels of 406, 407. It might move towards the level of 430 over near term. And on the downside, 390 is an important support.
All right, so that's the take coming in on Zensar Tech. But let's put the spotlight on the footwear company and especially Bata as well as Metro Brands. So one side you have Bata that was trading a little subdued in trade today. One point in time it was down in excess of 1%, and that it continues to hold on to that. ICICI Securities is expecting Bata to report slowest revenue growth at about 3% year on year in Q1. Among the other footwear players, they're saying Bata is early discounting and the core is facing higher inventory. Also have they preponed their end of season sales by about 2 weeks. They are saying that Bata is offering overall discount of approximately 15%, which is lowest among the top 5 brands versus 19% that's being offered by Metro Brands. Therefore, what they are saying that Metro Brand is their top pick in the footwear segment, and because of that, you can see the stock Metro Brands is soaring in trade, while Bata India is actually sulking in trade. And remember, the quantum of percentage does make a difference when as a consumer you go ahead to purchase something, isn't it?
Absolutely, it does make a difference for us there. But Metro Brands, Ashish, that's the stock that's making your list as well. So on the charts, Metro Brands, are you giving it a thumbs up given we're seeing more discounts there at least, but is that a reason for you to pick up?
Metro Brands on the chart, the price action is looking good. So definitely, I think its sales is going to be much better than what Bata is doing. And if you do the ratio analysis of Metro Brand which compared to Bata, it is moving on the upside. That shows that Metro Brand is much better peak as of now. Also, the stock is looking like in the third wave, which is the strongest wave as per Elliott wave, and we expect the stock to reach towards the level of 1200. And on the downside, 993 is the moving average support. So as long as 993 is intact, we can expect it to go towards 1200 levels.
All right, so that's the take coming in on Metro Brands. Price is definitely looking attractive is what Ashish has to say. Lisa, Colte Patil, why is this one actually being talked about today?
So Colte Patil, they have released their operational update for Q1, and the numbers look quite strong. If I look at the sales value, it is the third consecutive quarter where they have recorded sales of over 700 crore On year-on-year basis, it was up around 58%, but marginally it was lower on sequential basis. Talking about their volumes, that was also up 52% on year-on-year basis, and that was on the back of good traction seen in their new launches as well as on their ongoing projects. The company also launched a 1.38 million square feet in Pune in Q1 FY24. Management added that the consumer sentiments are strong, and building on these sentiments, Kolte Patil, they are well positioned to build larger homes and also offer differentiated offerings. So the stock was up in early morning session. It was marginally up, but then it has given up its gains in tandem with the market.
Okay. That is Kolte Patil for y'all, but that was the last stock for today. Ashish, Lisa, Shesha as well as Kunal for joining in with us, and thank you so much viewers for tuning in to ET Now. It's a goodbye from Cheryl, myself as well as the team who put this show together, but don't go anywhere. Exciting lineup that will be there on the closing trades for you all, and also interesting to see where the markets are headed in the last 1 hour.
Indian markets are going to be getting a boost of sorts.
Hi, good morning. You're watching the market right here on ET Now.
Indian markets are at an all-time high. You would really pinch yourself to say, is it this all factors align wonderfully well for us?
Nifty is now up a staggering 2,000 points. That impacts the market like no other. Stocks on the editor's radar. The strategy is going to be for the day.
We just start coming up on